Welcome to Module 4.6. This is all about cutting losses. Now, cutting losses is never a good feeling, but risk management is one of the most important skills that you can adopt as a stock trader. This could be the difference between losing all of your money or saving your money to invest another day, truly. So, what is risk management? Basically, it's a process an investor is going to use when assessing, through thorough analysis, the risk to reward ratio for a security. Essentially, when you calculate the potential losses that could be sustained in the hypothetical future, noting what you might do during the case of this event, this is risk management. Planning ahead, planning for that rainy day, okay? Can you sustain such a loss, and how long will it take to recoup that loss? Another thing I want to talk about is risk tolerance. Now that you know what risk management is, the next thing you need to understand is risk tolerance. This is solely dependent on your mental capacity in remaining calm during market volatility. A bunch of recommendations across the board when it comes to how much you should be investing in what sector or how you should diversify your portfolio, but there is no one true way to invest. There's no one correct way to invest. It's whatever suits you. A conservative way or a safe approach would be to make sure that you have a diversified portfolio with anywhere between 10 to 30 different stocks. And this recommendation comes directly from the intelligent investor. And what I've noticed from these recommendations concerning portfolio weight has been correlated with age. Understanding that age is just a number that does not correlate with your portfolio, but age is something that correlates with maturity in one's lifespan is very important. So in all the recommendations that have mentioned age, where there's a younger investor, the riskier the portfolio. Basically, in all the recommendations that I've seen, the younger the investor, the riskier the portfolio. And I'm not going to recommend a certain amount for you to put in your portfolio to begin with, but I would put whatever you feel comfortable with losing in there. Okay. When should you sell for a loss? Now, this is going to be different for every investor, but it ties directly into risk tolerance. Sell for a loss whenever your stock has taken too much time from you or it has been extended longer than expected. Remember that patience is a virtue, but patience with a Y is another virtue entirely. In my experience holding long positions that didn't turn a profit as soon as I expected, those are the times I held about 20% longer just for the patience with a Y. It sucks when it comes down to that, but you still have to be able to determine between selling for a loss and holding on to the bottom. You guys need to be able to sell when it's clearly on a downtrend, not just because you're feeling greedy and you want to see green at the end of the day. Why you should sell for a loss is a different story. I've already given you a couple examples as to why an investor would want to sell for a loss, but given that no investor really ever wants to lose their money, here are a couple of reasons as to why you would want to sell for a loss or sell in the red. So there are many different scenarios that I could play out, but a personal experience of mine happened a few years back when I had been trading Tesla, and my first problem was that I had been playing with more money than I had initially. I was trading on margin, which is problem number one. Don't trade on margin. Problem number two was that I had lost about $3,000, which was triple what my stop loss was. And that's problem number two. You need to have a stop loss. If you hit that point, you should just stop trading and walk away for the day, which gets me into this third little tip that I didn't listen to myself, which is if you have a red day, walk away. Don't continue to revenge trade. That's exactly what it's called. It's revenge trading. Just trying to scrape yourself back to that even point, and sometimes it can make it even worse than where you were before you made that decision, okay? So don't play catch up. Don't revenge trade. Know when to cut losses, and I will see you guys in the next module.